is Barb Scarlett with Century 21 in the Scarlett Real Estate Group, and unless you have lived under a rock, you've probably heard in the media lots of talk about interest rate hikes and the price of real estate. So I'm here today with Melissa Stack from Centum Omni Corp, who's going to help educate us a little bit about what's happening in the world of mortgages. Thanks for coming.
Thanks for having me.
And if you like this information, be sure to like this video and don't forget to subscribe. So let's dive right in and talk a little bit about interest rate and then some glossary terms for my first-time home buyers that are new at buying. Interest rates have hiked twice so far, and they're talking about a possible third interest rate hike. Can you tell me a little bit about that and where you see things going?
Sure. So yes, Bank of Canada did increase rates twice in the last bit. The next one is for July 1st, and the economists are stating that it will increase. How much it'll increase is still depending. It may be 50 basis points or it may be 75 basis points. But what they're saying is this increase is only a short-term increase. It will increase for the rest of 2022. And then in 2023, you'll see it level off and decrease and stay around the 2%.
Okay. So if you were to have a variable rate right now, knowing that the interest rate is going to hike again, what is your advice? Is it time to lock in? Should you stay variable knowing that maybe it's going to come down? How do you educate your clients on that?
So for that, variable rates are always a comfort level. You are going to be lower than what the posted rates are. You just have to be comfortable with your payment fluctuating and not knowing how much you paid off at the end of the term. When it comes to fixed rate terms, you know what you pay off in the 5 years. Exactly. Variable rate fluctuates with Bank of Canada, so that is unknown. It's really a comfort level for each and every client.
Right. So a little bit of a gamble, but in the long term, if you've been riding out the variable rates for a while, you've done pretty well.
Yeah, people who've been in variable rates are really happy that they're in the variable rates. They've been able to do very well with paying down and paying low rates.
Right. So then you said the word basis points. Tell me about basis points. What does that mean? The Bank of Canada is going to move it, half a basis point. What does that mean?
So what that means is they talk about 50 basis points. It's 0.5%. So if they're increasing it by 0.5%, your variable rate mortgage will go up by 0.5%. If they decrease it, it'll decrease by half a point. So that's what you're looking at when you're looking at variable rate mortgages.
Right.
When Bank of Canada does increase it, the posted rates go up as well, not in the significant up 0.5 point, but there are variations for that.
Right. So, okay, so we've had this interest rate hike. Buyers are a little bit apprehensive right now. But the good news is prices are starting to settle and finally buyers can get into the market. Is it a good time for buyers to come and see you and make a purchase?
I think it's a great time. You will always increase on your property. Your property values will always increase. It may not be as significant as we've seen in these last 2 unprecedented years, but you're always going to get an increase. And rent isn't decreasing, and you pay a lot of money for rent in the Niagara region. It would be better for you to go towards your own personal property.
And because obviously interest rates, if you think relatively speaking, and I don't know if there's a graph that I can throw up on the screen, but relatively speaking, they're historically low. In fact, the rates were unprecedentedly low for the last, 3 years, would you say?
At least 3 years,
yeah.
Yes. We've been very low. It's still going to stay low. We may not see the 2% that people were getting, but you're still going to be in single digits for borrowing.
Okay, so our first-time home buyers, it's very difficult for them to get into the market. They have to come up with 5% minimum in order to get into the market. Tell me a little bit about a high ratio mortgage, what that is, or a conventional mortgage, and then talk a little bit about that.
Okay, so for first-time home buyers and people who are just starting out jobs, it's very difficult to come up with 20% of a purchase price. So if you're able to come up with 5%, you will have an insured mortgage. And what that means is you pay a premium and the insurance company will pay the lender back if you were unable to make that mortgage payment and default on the mortgage. Where a conventional mortgage is 20% down on the property and you don't pay any of those insurance premiums.
Another question that I have is, with the insurance premium, do they have to bring that money to the table along with their down payment, or does that get buried in their mortgage?
So insurance premiums always get added to the mortgage. So they're not coming up with that amount.
So that's not a closing cost?
It's not one of the closing costs that they're required to have. So when they do the premium, they add it in, and that gets paid off as you pay off your mortgage.
Okay, well, that's good. That's good. So let's talk about some of the terms that we were just talking about. What is a fixed rate? What is a variable rate?
So a fixed rate is a rate that you can hold for 1 to 5 years, and that rate never changes. A variable rate mortgage is a 5-year term, but the rate changes as Bank of Canada changes their rate. So it can increase or decrease throughout. Again, it depends on the client's comfort level. If they don't mind their payment changing throughout the 5 years, it is a good way to go.
And what is the term, the word term mean, and what does amortization mean?
So amortization is what lenders use to take your mortgage amount and spread it over 25 to 35 years. The max is 35. And the term is what you hold your rate for. Again, it could be 1 to 5 years, but your term is you hold it, say 4.49 for 5 years. In 5 years, you will then renegotiate that rate.
So if you have a conventional mortgage, you do not have the insurance premium, the banks are going to order an appraisal, correct?
That is correct.
So if they have a insured mortgage, they're not going to order an appraisal?
No, the insurance companies are the ones who handle the appraisals. So the purchaser does not have to get their own appraisal. The lender doesn't require their own appraisal. They take care of it. On a conventional mortgage, we do need to see an appraisal. A couple of reasons. One, to ensure that the client the house that they're buying is the same value as what they're lending.
Are the appraisals catching up now? Because before, when the market was so heated, we couldn't even get an appraiser through the door in time to firm up. How are we finding that out there now?
So with appraisers, it's kind of twofold. Appraisers have been very busy, as well as lenders are requesting appraisals closer to closing. Because of the fluctuation in the market and the prices being unknown, they just want to confirm. So appraisals are usually being done between 10 days. I've seen actually one done 3 days before.
Right.
So it's very close to the closing.
So now what happens if a buyer makes a purchase for $800,000 and it makes sense at the time, it's a 2-month closing, and then the appraisal comes in at $775?
So depending on the circumstances, if it's a conventional mortgage, there might be some room to increase the down payment or increase the loan amount, depending on that. We have run into situations like that where we've had to look at different lending opportunities for them.
Right, right. We haven't seen too much of that yet then?
No, not in the Niagara area. It's been not significant. There have been where it's been maybe 5,000, 10,000 difference, but not in the Toronto areas where there are hundreds of $1,000s difference.
Yeah, for sure. So I guess to wrap things up, can buyers get pre-approved, and do you recommend that they do that now before the next interest rate hike?
I do. I recommend everyone getting a pre-approval now. Most lenders will hold their rates for 90 days, and then you're locked in and we don't have to worry about the rate increase.
Right. Yeah. Okay, well that's great. Well, thank you so much for coming, Missy. And if you want to reach out to Missy, obviously we'll have her information, and have a great day.
Thanks for having me.